And let's start with the energy conversation, as energy did get a downgrade, and the downgrade, obviously, we got to make decisions on Friday. If I would have been the seer and said, "Oh, we're going to get a nice little 2.9% upward movement in price, and we're going to threaten that breakout," yeah, we would have downgraded. But the downgrade, don't regret it. You see this downward channel here. You see the upward longer term channel there. Obviously, the symmetrical triangle broke out. We saw the volatility play out, and I am interested in this. And so when you're looking at this, I like the shift in volatility here. There's no doubt about it from a sector perspective. And when you're looking at this sector from that underneath the sector, you got industries. Then when you look at the individual components, there is some interesting opportunity here. Very glad Mark was talking about this in his commodity stuff over the weekend. When you're looking at energy, obviously we want to start with the big dogs, right? The Exxon Mobils and the ConocoPhillips of the world. Interesting little bottom feeding opportunity on Exxon as you see this increasing in the support in the short term. That's more due to this 200-day moving average, like the upward movement in price. Wouldn't exactly say this is swing trading 101. This is not swing trading 101. This is more of, hey, do we have some opportunity from a position perspective? Do we have some opportunity to add to a portfolio to get a fairly valued dividend paying component where a lot of people believe that energy prices are a little undervalued right now? And so ExxonMobil is just going through an interesting battle against the 200-day moving average. ConocoPhillips, very similar, but I do think it's a little bit stronger from a tradable situation. I also find it stronger from a trend and a pattern. Whereas ExxonMobil fighting against that 200-day, you're seeing a little bit of a right shoulder breakout where you reclaim the 50-day moving average here. That's very interesting to me, especially if Conoco can close above 47.50. That's going to be interesting there. But the two I'm really looking at here, and I want to get Mark's take on this, is OKE, very similar to the ConocoPhillips. But the one that really has caught my attention, and I think it's caught the attention of a lot of traders out there, is actually Apache. You got to love this pattern that is developing here. Number one, you got a head and shoulders reversal formation confirmed against every moving average, it seemed like, just on Friday and Thursday of last week. And then now you're running into a very clean breakout opportunity on Apache. Let me draw that line. You see me connect these support levels, support. Well, look at just over the course of the last week. Look at resistance form at 20. Let's drop this down into an intraday chart. You see that resistance. You see that resistance. You see that resistance. Look at today. Pop on the open. Remember the S&P open. Negative on the open. Pop on the open. Showed no weakness. Maintain consolidation right at that resistance level. I believe this is the cleanest chart in the energy space right now. And so when you're looking at it, when you're looking at this energy is not broken out from a, I would, let me put it like this. If I had to rank energy today, I would keep it the exact same as it was last week, because we have yet to break out ultimately of the 50-day moving average. We have yet to break out of the 50 handle. Those are still very important to me as a technician. I would have maintained it with the philosophy of once we get above 50, then we upgrade. But what you're seeing today is a breakout against the symmetrical triangle, and you're starting to see the front-running behavior happen in many stocks underneath this sector itself. Can they continue? Tomorrow's important, but and again, we haven't confirmed on Apache yet. You just love the front-running going into it. You haven't confirmed in energy yet. You love the front-running going into it. Probability starts when you actually break out, though. Like the analysis in energy, like the pop against the intraday price action in energy, you see that pop on the 15-minute chart. Let me bring it out to show you a little bit more of the detailed downward movement in price. Look at this downward movement in price intraday. Look at the pop. You got to like that. Energy should be in the spotlight a little bit this week from a sector perspective when you're looking at the cyclical areas of the market. Now, Chucky, before I get into materials, industrial, and finance, what's your read here in the energy space? It's a big area of the market for you from a long-term and a short-term perspective.
Yeah, short term, we've had supply disruption a little bit with the hurricane. That's a short term, and I'm sure you'll have some day in the next 3 weeks where supply coming back and oil's down that day because algos are running with the headlines. But interesting thing with COVID, and I ran across this stat this weekend, is that COVID's been hitting different places in the world. You have not seen only the most minuscule demand drop off on oil. Coming out of Asia, there hasn't been really. It's been very, very minuscule. I think that's very, very telling. Once COVID, and once again, you're betting, or the supposition is that COVID gets better and that we're peak and cycle down and all that. That potentially unleashes a huge wave of more demand. OPEC doing their job, keeping supply constrained, short-term supply situation with the hurricane, and the chart's beautiful. One thing on that Apache chart, we pulled that up on a weekly chart map.
Yeah.
I absolutely love, and I've been in Apache. Full disclosure, I've been in Apache for several weeks now. I
Oh,
love
so
it.
you're the one front running everything.
I've been front running
Okay.
it for
Okay.
for a few weeks now. I love it when it comes up to the 20 weekly and you get resistance, and you've seen this the last 2 weeks, right?
Mm-hmm.
And it creates this clean entry level. You gotta pocket clear R up to the next resistance level. If oil breaks and if energy breaks, Apache's still going to be tied to energy. If energy's down big, Apache's going to struggle to break this out. That looks like a quick trip to resistance, though, if
Well,
energy
and
breaks
and I
out.
wouldn't target anything above 24 on Apache. I think
Yep.
that's max
Yep.
opportunity in the
That's where I
short
take
term.
profits in the short term.
But 20 to 24 makes a hell of a lot of money.
That's a quick, and I think it's a quick. I mean, Apache is a high, is a high beta stock. I mean, it moves. It sells off more percentage wise, and it moves more percentage wise, both directions. So it's not as stodgy as an Exxon Mobil. It can move. It's a good trading stock. I also like the fundamentals of the company.